actually have several questions for you about the tax law, but if we could just start with the news of the day, and actually what the president tweeted this morning about a major U.S. company. Yesterday, we saw the Dow Jones Industrial Average fall 300 points, and so it's down about 2,500 points from its peak in January. It sounds like a lot of this is due to escalating fears about trade wars. Mm-hmm. You know, there's a lot of optimism after the tax law passed, and now there's a lot of concern, and I think you've used the word uncertainty. You know, but now we're seeing companies actually changing behavior. Prices are going up, steel and lumber. Harley-Davidson, you know, major iconic U.S. company, said that it was moving some of its more of its operations outside the U.S. to avoid Europe's retaliatory tariffs, and the president responded very angrily, saying that they were waving the white flag. What's your response to that? Do you think they're waving the white flag?
Well, first, it is correct that uncertainty is bad for markets, and you know, economists call uncertainty a mean-preserving spread in what might happen, and so the idea would be that, like, the average is still zero, but you know, you increase the tails of the distribution. And I don't think that uncertainty is really the right characterization for what's going on right now, because the mean itself is hopefully going to move. The president has a clear objective of moving the world to a better place with more reciprocal trade deals, with lower tariffs and lower tariff barriers or non-tariff barriers. And we're in the midst of, you know, negotiation to move us in that direction. And so I think that the direction is not zero. The direction is positive. And the OECD put out a study of what happens if Donald Trump's vision of the world becomes true. And they found that global GDP goes up, US GDP goes up, and so on. And so I think that that's the ultimate objective. But of course, uncertainty, you know, while you're trying to accomplish a big objective, is something that can roil markets, and that's something that we've seen, I think, over the last few months. But the bottom line, though, is that you know, moving past Harley-Davidson to the data, if you look at what's going on right now because of the tax reform, which is the title right of our event, then there's a massive amount, an explosion of capital spending, but especially an explosion in the location of investment in the U.S. Foreign direct investment skyrocketed about 10% in the first quarter. The repatriation of earnings by U.S. multinationals was like about a factor of 10 bigger than what it was in the fourth quarter. And so there's a massive amount of activity coming home. And so Harley-Davidson is an interesting story, but you know, I mean, if you look at the data, then it's the opposite that's happening.
But what are companies supposed to do? Are they supposed to wait it out and get to, like you said, that point along the spectrum where everything works out and we do have this kind of concerted global growth? Or in the meantime, are they supposed to face these higher tariffs, whether it's in Europe, Canada, wherever? Because it sounds like some companies are laying off workers, you know, in the real time.
Well, again, the hope is that we I mean, the president wrote the book, The Art of the Deal, right? It's all about making deals. And other presidents have wanted to improve our trade deals, which aren't reciprocal. You know, the Europeans have 10% tariffs on our cars already, and we're trying to fix that. And so sure, you know, they're retaliating right now, along with, you know, I guess they're saying it's because of the steel, but we've got big objectives to lower tariff barriers between our countries. And right now they're targeting this and that, and we understand that that's difficult for those companies. But again, I think that if you were to take the retaliation from the Europeans and then add in the benefit of the tax reform, then even for Harley-Davidson, they're way, way ahead. And that's why when you look at things like sentiment indicators, Morgan Stanley has an indicator of capital spending, and again, firms spend money on capital when they're optimistic, right?
Right.
It's the highest it's ever been. And so I think that for sure there's a lot of stuff going on in the trade space, but it's small relative to the overall economy, and in the data, it's being dwarfed by the positive news of the tax reform.
So do you